Hey, good afternoon, everybody. Going to go over our Forex trades for today, January 5th. First time we had a trade this year, just one. Picked up 3.4 pips on a size adjusted basis. We'll go over that in a second. Hope everybody had a great holiday and is back in the office. Let's just touch base on some economic developments that happened either overnight or this morning. Bank of Japan's Kuroda, he thinks they can reach the 2% target of their current policy. And he is saying that they are out of deflation. Who knows? They've been in deflation for so long. With all their monetary easing, it's amazing that they haven't achieved 2% yet. I mean, you're talking years. Well, same thing here in America, really, if you think about it. But so that's just some of the things he was saying. He says Japan economy has been recovering gradually. It will continue gradual recovery throughout 2016. Moving on, BlackRock, they warned on bonds as Fed officials shrug off the stock rout that happened yesterday, which was set off by China. Then last night, China opened down 3%, came back, went back down 3%, and then finished basically flat on the day for the most part. So they think the Fed's going to shrug off any stock market action, and they said they feel, BlackRock feels that the Fed will continue to raise rates throughout 2016. So that's why they're warning on bonds, because bonds will have to go down if the interest rates are going to go up. Let's see. Former Fed President Fisher, it's so funny what his comments. He says, we front-loaded a tremendous stock market rally. He says you have to be careful here and frank about what drove markets. I mean, come on. He says after 6 years of actually, that was all he had to say. So, well, he said some other things. There was a couple things that we highlighted. So he is no longer a Fed official. So, like I said, he's the former Fed president. So he's now warning us after 6 years since the financial crisis of the stock market going up. He has now decided to warn and say, well, you have to be careful what drove the stock market. We all know the Fed drove it. The Fed is talking about raising rates, but we also know that the Fed at any moment could reverse course, since all other central banks around the world are not raising rates. They're still at zero bounds. Some are negative interest rates. They're still adding liquidity to their economies. We're the only one. So at a moment's notice, we could reverse course, lower rates. There's some big institutions out there calling for the Fed to do another quantitative easing. And if that happens, the stock market's just going to go higher. So he's a little late in his warning. You know, maybe he should have thought about this before they started all the QE back in the day. Citigroup came out, and after having an outperformance rating on the stock market for the past 6 years, as Fisher was talking about, Citigroup has now cut the entire stock market to underweight. So now you have to take that in perspective. I mean, they are Citigroup. They're pretty big. They had an outperformance rating for 2015. Stock market finished down a little less than 1% for 2015. It obviously didn't outperform many other instruments, including bonds, in 2015. So they were dead wrong, and now they're saying to underweight it. So we'll see. They had pointed out, they said that analyst estimates in 2014 were forecasting a 12% increase in earnings per share in 2015, and they were one of them. The eventual outcome for 2015 is likely to be nearer zero, they said. So they're criticizing their own forecasts, or at least they're admitting, well, they're not flat out admitting they were wrong. They're grouping themselves in with the entire street. So it's pretty funny how these guys word things and whatnot. So so there was really no economic news to really speak about. It was just some points we wanted to bring up. As far as the trade, we had one trade, which was last night, Aussie CAD. We were long this from 1.00186. It went in our favor. It was bumping up against that 1.0032 area. 3233 area kept bumping up, and as the tops here, basically tops here. So it was evident to take the profits and run. First trade of the new year, first trade of the new month, so might as well grab it. So we had 30% of our normal size. We made 11.5 pips, or size adjusted 3.4. So we'll take it. You can see what it's done. If you're still in it, it wouldn't have stopped you out because our stop was below this bottom. It could very well easily, our algorithm was looking for a pretty nice run here. Unfortunately, it had pulled back, and the algorithm has adjusted itself, looking more for a sideways action in Aussie CAD on a 1 hour chart. This is a 30-minute chart you're looking at. So, but we'll take the 3.4 pips and we'll move on to tomorrow. No other trades. Really no other. There was one other signal this morning, but no trade has been executed. So that's it. So if you're still trading now, good luck. We're going to move on. If any signals come out, they will be coming your way, and we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.